Oh my God. Awesome. Chijioke, it's an absolute pleasure to see you again. Thank you for joining us.
Thank you for having me.
Absolutely. So let's hop on in. Why don't you tell us, if you don't mind, your personal story, your background, and you start from where you want, if when you were a twinkle in your father's eye on up to to today.
Okay. Wow. All right. I can take you back to the twinkle. So Chijioke Asomugha, Nigerian, born here in the States, but I'll take you back. I was born actually in Louisiana. Um, Both my parents immigrated from Nigeria to the US back in the mid 70s. Uh, my dad was a petroleum engineer, my mom a pharmacist. And so spent a number of years in Louisiana before moving to Los Angeles, where I got my formative years. That's kind of where I grew up. But I tell everybody my family story. My dad had always wanted my mom to have her own business. So she was doing a pharmacy thing at like what would be the equivalent of a CVS or Walgreens today. But they decided in the early 90s to purchase an independent pharmacy back when you still had a few of those everywhere in Southern California. And so before I could spell entrepreneurship, I was like, I want to do that one day. So I was working at the pharmacy at 12 as a cashier and a stock boy, along with my older sister, younger brother, and younger sister. And so it was really amazing to see. My dad then passed away about a year or two later. So when I was 12, 13 years old. So I then watched my mom spend the next 20 years growing that to four pharmacies and a home health agency in Southern California. So that was like, I got to see businesses kind of grow before my eyes. Fast forward, went to Stanford undergrad, had a phenomenal time there, played football, studied economics and public policy. Uh, I went there with this view that I'll even say this vision that one day I'd do something in business that would be great and transcend kind of not just where I was today, but kind of people everywhere. So community building, if you will. Um, I left Stanford, graduated, and worked at Goldman Sachs for a number of years in investment banking, right around that technology, media, telecom space. Did some sports financing and then industrials, industrial tech. Um, had a great time there. Like most people who grow up in Southern California, work in San Francisco and New York, the next logical move for me was Cleveland, Ohio. That's typically where you go next, right? You to LA, to Cleveland, Ohio. No, LeBron was there. No. In all seriousness, my wife is an orthopedic surgeon, and so decades ago, or over a decade ago, she got into the Cleveland Clinic, which was a phenomenal opportunity for her for her residency. I had gone to business school at Columbia, was back at Goldman, said, "Don't worry about me, I'll make it work."
Mhm.
I moved to Cleveland, didn't know anybody, so it was definitely interesting transition for us. Um, but I was fortunate to get a job in private equity, which is where my focus was. And so joined a company called Cyprian, or a fund called Cyprian Partners, which was doing great work nationally, investing in buyouts and mezzanine financings. So spent a number of years at Cyprian doing some great deals, going running through a few funds, funds two and three, and right at the advent of Fund Four, I got that itch to be an operator. I remembered watching my mom and dad early on. I said, I want to roll up my sleeves and actually build something myself, or at least find out how the operations side of the house works. So I left private equity and joined Erico International, which was an industrial tech company, as their global head of strategy and growth. So I was doing all things supplier development. This small company, relatively small company in Ohio, had me all over the world, Netherlands, Europe, Asia, you name it, helping grow the business, South America. Uh, Long story short, we took a $600 million company, 3.5 years later, sold it for 1.8 billion to Pentair. And so it was a life-changing moment. And I'll say my wife hasn't let me forget she's the reason we moved to Cleveland in the first place back then. Uh, but it was
It's
really
all me. She was with you shooting in the gym. She's like, no, that was, yeah.
So
She's your
uh,
Savannah.
she is, she's indeed. And uh, so great exit. And it was at that time I had actually met one of my current business partners and really good close friend, Marcus Martin, who was working in private equity at Riverside and then had gone on his operational journey with KeyBank. And we said, look, there's probably never a great time to say, hey, I'm quitting my job and starting a business, but this felt like a really good time. He had a successful exit as well. And so with that, we hung up our first shingle, called it the Inkwell Group. So it was a
Okay.
private equity firm with a focus on diversity, building diversity at the board level of lower middle market companies.
And
Look,
what year was this?
this was 2015, right
Okay.
into 16. And I'm going to tell you right now, Stephanie, nobody cared, right? Diversity wasn't a big thing then. It was two guys who said, we think it's important.
Yeah.
And so with that, we started doing deals one off, right? We didn't have a fund. We would just pass the hat around when we found something we liked. Um, about 2 years into, not sorry, about 6 months into that journey, we met two other folks, our current partners at Fvlcrum, Ben and Harrison, who had a similar outset on life in terms of private equity and diversity and bringing those two things together.
Yeah.
So we said, let's partner together and start doing deals together. And that's what we did in 2017. Um, Fast forward, George Floyd gets murdered, a lot of social unrest.
Yeah.
2020 hits, and everybody's talking about diversity. They're like, oh, this thing that we were talking about, however
Oh,
many, I tell everybody we were ahead of our time.
yes, you were.
But we decided to double down on our message of PE and diversity at
Mhm.
that time and actually raise a fund. So no more passing the hat around. Let's raise a fund. So we created Fulcrum, which is really Fulcrum standing for like that opportunity for change. We want to be the Fulcrum for change, where the capital markets see diverse investing as a different story,
Yeah.
a better story. So launched in 2020, and then we had this view that we could raise, I don't know, $70 million, do some deals. 2021, we actually started that raise. I'll fast forward last year, 2023. So about 18 months into that fundraise, we closed our fund with over 300 million in
Amazing.
commitments. Yeah.
Yeah.
All with the focus on investing in minority owned businesses of scale. So we don't do any venture capital. We're late stage
Yep.
investors, buyouts, but um, it's been amazing to see kind of the support we've gotten along the way.
Yeah.
And we talk a lot about the capital continuum. So whether you're at early stage, middle, late stage, we feel like we need to show up and represent across that continuum for investment strategies. And so, yeah, we're now investing out of Fund One. We have 6 portfolio companies with some amazing CEO, founders, and executives, and building out the boards of those teams now. So,
Okay.
those.
I have so many follow-ups.
Yeah.
So many. I'm just gonna try to remember them all. And talk to me a little bit about your thesis in terms of diversity and investing and why it's important and what is kind of um, the advantage, the competitive advantage you think you all bring by going after that specific target.
Yeah. Well, even in your question, there's a lot there. So why is it important? Um, Diversity matters, right? I think that's how you get the best out of your companies, your people, when you have that diversity of thought, the diversity of backgrounds. Um, that's not just me saying it. That's a number of studies from McKinsey to across a number of places where they've showed that returns are better when you have a diverse group, and
Yeah.
that's truly diverse group. For us, we always thought that, what we heard was that you're sometimes sacrificing alpha or the returns when you focus on impact.
Hmm.
We fundamentally believe that no, impact enhances the returns. So we tell, and we've shown this out in our track record, but that we use impact and alpha together, right?
Hmm.
Versus the other. It's like, no, they work together to enhance the returns. For our companies. And so for us, diversity is hugely important. We have spent the better part of our careers cultivating relationships that we think bear fruit when you think about executives of talent who are often overlooked, right?
Yeah.
We always say talent is created equally, but opportunity is not. And so, how do we now start giving that opportunity to a lot of these founders, these operating executives who, for some reason or other, the capital markets seem to ignore? And so, when you talk about competitive advantage, I think the biggest one for us, well, there's two. A, we're not trying anything new. And when I say that, it goes hand in hand with the fact that this is what we've been doing for over a decade now, right? This is like where our experience is. We're not, hey, see if this works. It's like, no, this does work, and you're going to watch us perform. So I think that's the first thing, right, from a competitive advantage. The other thing is today we're kind of, I'll say, the market is still trying to wrap its head around what does this mean when there's that lens of diversity on it. And so we're
Yeah.
taking advantage of the fact that I'll say that it's I don't want to say unstable, but more of like not mature in the
Mhm.
marketplace in terms of an understanding from a capital markets perspective. And so, when you have that kind of uncertainty or people don't know, that's the opportunity to make money because you're like, no, if you believe in it, if you're truly passionate about what you're doing, even when everybody else doesn't know, you can find those opportunities that are overlooked by others. And so that's what we're doing now through our strategy.
I think, and I'm sure you're aware of some of there's the market has kind of shied away from DEI investments, and there's kind of like, does this really matter anymore? And people who are very, very pro diversity and inclusion after immediately after George Floyd have backed off. How have your LPs showed up in this new world of, does it really matter? Or are those the real guys anyway? Because they put up money, so they were really about it anyway. So I'm just curious how that's showing up at Fulcrum.
Yeah, look, you can never undersell the fact that when people put capital towards what you're doing, it speaks volumes. So we have a tremendous group of LPs who believe in what we're doing.
Yeah,
Uh, and that spectrum on their interest in DEI, their interest in returns, I think it runs the gamut. They're like, you
yeah,
guys, something that works business wise, because you can put a lens on something, but if it doesn't make business sense,
it
people
does.
will shy
Yeah,
away from it. But when they can see those two things working together, that's when people get excited. So our LPs have been super supportive from day one. And I think with any messaging, you find those who align with you,
yep,
and then those who don't, you don't really spend time talking about because they're
exactly.
just not there. But yeah, no, we've got a tremendous group of LPs, and really institutional grade too. Our fund was, I think, a little bit over 94% institutional, which is rare
Okay.
for a first time fund.
Yeah.
Could see that with maybe more family offices and high net worth individuals. This was predominantly institutional for us. Yeah.
Okay. And then, okay, last question. Oh, actually, not last question about this. All right. So let's talk about more about Fulcrum. I want to make sure I understand your thesis. So you all are interested in buying small cap, diverse owned businesses, industry agnostic, or can you talk a little bit more about what you're focused on?
Yeah, absolutely. So from an investment strategy perspective, we focus on three main industries: government contracting, healthcare services, and then business services, typically tech enabled services. So, if I break that down a little further, in the government contracting space, we look at a lot of infrastructure services opportunities. We look at a lot of healthcare services opportunities, IT as well. On healthcare services, for one of the companies in our portfolio is a dental roll up. So we're looking at dental practices. We're looking at any service based healthcare opportunity. And then on the business services side, a lot of that takes the form of cybersecurity, tech enabled media and marketing platforms. We now own an iconic 50 plus year old marketing agency in Burrell, which is multicultural marketing. And
Okay.
so,
Oh, Burrell. Yes, they're yes, it's Chicago based, right?
exactly, yeah.
Yeah, yeah, yeah. Okay. That's
So,
dope. That's dope. I'm like, oh, yeah.
yeah, no. So those are the three areas: government contracting, healthcare services, and then kind of tech-enabled business services. In terms of the company sizes, so typically what we're looking for are companies that are doing anywhere from 3 to 15 million in EBITDA.
Okay.
Our sweet spot is right around that 5 to call it 10 or so
Yeah.
EBITDA, and then geographically, we're focused on the US because our aim is to close the racial wealth gap. And
Okay.
so companies are headquartered here in the US, but a lot of them have international operations,
Okay.
which is a plus for us. So, yeah, that's kind of from a strategy perspective. That's where we hone in. And then typical management buyouts, leverage buyouts,
Okay.
all the things that we've spent our careers doing.
Okay. And then last well, it's probably not the last technical question, but so in light of like with the interest rate environment last year and deal flow being completely tightened in the product excuse me private equity space, like how has that impacted you all?
Yeah, great question. So, look, we've all become accustomed to the interest rate environment, low interest rates, and are now watching it move and, obviously very high interest rates. I think the thing that we hold our hat on is we don't over lever our companies, right? So we
Anyway, okay.
typically
Yep.
take a modest approach to leverage. So I don't use that to say that interest rates don't impact us, but we are
Right.
not ones where we're crushed under the weight of interest rates because we put so much debt on these companies. So we stay pretty conservative in that respect, but
Okay.
we pay attention to it all the time. It doesn't affect kind of deals when you're looking at pricing because
Mhm.
when they go up, we have to pay more. But
Mhm.
typically, our leverage is pretty low in all of our companies. Yeah.
Okay, cool. So personally, I know the answer to this, but for everyone who's watching, do you invest in alts personally outside of Fulcrum?
Do I invest in alts personally outside of it? The answer is yes, I do. I'd also say though, because I'm invested in Fulcrum, like that touches a lot. But yeah, even
Yeah.
prior to, yeah, it's funny, an interesting story on that. I'm invested in my wife's company. She is starting a shoe line. I'll say an amazing footwear line for women, and so I've been watching her on her entrepreneurial journey as well. And so being able to be contribute that side, not just from a capital perspective, but also from an intellectual like relationship perspective, understanding that. But yeah, outside of Fulcrum as a private equity firm, I do have investments in alternative investments because I do think they move the needle. And if you find the right founders, whether they be friends, people you've met, uh, you can make a real difference, right? I know what it feels like to hang up your own shingle and say, hey, I'm trying to do something. Do I have anybody who wants to support? And so it's always great. You can't make every investment. You can't
No.
be an investor in everything, but if you find the right ones, it can be tremendous, not just for the founder, but for you yourself as well.
When was your first one? Do you remember?
My first one was investing in myself. That was the first one, right? Before you can take care of others, you got to make sure you're secure.
Hmm.
So that was the first thing, like figuring out when to invest in myself. And then I think shortly thereafter, what was the first one? I can tell you about some amazing ones. So
Was your
uh,
when you say invest in yourself, are you talking about Inkwell? Or are you talking about going to college? Or are you talking about something else?
uh, I was actually talking about Inkwell, but
Okay,
yes, I
okay.
guess going to college is an investment in yourself as well. Uh,
Amazing.
but yeah, I was talking about Inkwell as the first
Yeah,
investment.
yeah.
Um, that was the one that kind of set everything off. And then after that, from an alternative perspective or a private company, we invested in a company called Title Boxing Club, which is a franchise fitness boxing
Yeah.
uh, ever. And so that was kind of my first, hey, put private capital towards one of these companies, just even on your own. And then we kind of commingled that with Inkwell. And so, yeah, that's been an amazing journey.
Yeah.
But then more recently, have had opportunities, as invested in Uncle Nearest, which I think I'm just really fond of the executive leadership there.
Sure.
And then a few others. Bump is one that has come up, and they do financial services work for independent creative artists as well. So yeah, a handful of investments that have been made, and I think that's how we keep the economy going.
Absolutely. So, okay, I know you bore witness to your mom and her entrepreneurial journey, which I am certain um, gave you. And actually, I'm gonna ask you because an interviewer would ask, like, but I'm pretty sure, like, seeing your mom and her journey let you know, like, yes, this is possible. I should absolutely do it. Did you keep that energy and that knowledge that you would be an investor or an entrepreneur on, to this day, or did you? Was there a time where you kind of got off track a little bit and had to bring yourself back?
Yeah, it's funny you mentioned that. I probably would use a different term than off track. I would say adversity strikes at different points, right? And that's part of being on this journey. What I've learned, and I can take you back, right? I mentioned losing my dad, but even in my more formative years as an adult, moving to Cleveland, that wasn't in the game plan, right? So how do you
Mhm.
make these things work? Starting your own business, not having success on day one, how do you make it work? Uh, there's a Nipsey Hussle quote that I often refer to where he talks about the the difference between him and a lot of other people is that he never
They
gave up.
quit. That's right.
Yeah, I didn't quit, and it resonates so much with me because that's it, right? And I'm not saying that other people give up and quit all the time, but it's like I just kept finding a way. And when one road was closed or a wall was set up, you figure out a way to go around it. Maybe you got to backtrack and go this way, all to get to that ultimate goal of like having something successful that you've started. So yeah, been through a lot of trials and tribulations along the way. It hasn't been a linear path,
Yeah.
but I think that's what makes it so rewarding.
I love it. I love it. Um, does your personal due diligence process differ from Fulcrum's, or is it very similar?
Um, there are similarities. I would say when you say personal due diligence, like if I'm looking at something just for myself or
Yeah.
whatnot, um, yeah, most of the things that try to do within the realm of like things that are compatible so that I'm not like having separate investments here
Yeah.
and
Yeah. Too much
whatnot. But
context switching.
yeah, but from a diligence perspective, like I try to use the tools we build from an institutional perspective on a personal one, right? Like I
Yeah.
talk to people who have, with their significant others, they have like financial planning sessions and all these things. And I'm like, well, they probably do that at work and have seen it be effective. How do you bring that to the home front?
Yeah.
So there's a lot of similarities. I think, yeah, I try to maybe the only difference I would say is like I don't always check in with my kids if they like the investment that Fulcrum made, but I probably will do if it's like something we're doing for the family. Uh, but yeah, no, I think when you can find those similarities, it helps you become more efficient. You got to believe
Yeah.
in that process that works there as well.
And it incorporates it into your life. It becomes a lifestyle as opposed to that's my job over there versus, this is just what I do here.
100%.
Do you have any advice for any person who is new to alternative investing, or who wants to get into it? Like, what advice would you give them?
Yeah. So there's a couple of things, right? Because as you know, the alternative investment space is huge, right? Whether we're talking about venture capital, private equity, hedge funds, all of this, understand what class you want to be in first, right? So do
Yeah,
your research. And let's say you land on venture capital or private equity, then take a strong interest in the companies you're hoping to back, right? And by that I mean like really follow up on them, um, understand why it is. Sometimes I think people have gut feelings that they
mhm,
try to go on because there's not a whole lot of information out there. I would say the gut feeling is great. Try to pair that with some data, right? Bring those two together so that it makes sense because this is real capital that you put out, whether it's a dollar or a million, right? It doesn't matter. It's like
right,
it's capital that you're putting out. So pair the gut feeling with some actual data and analysis. Ask the tough questions because I think that's how you get the most out of not only the investment but the folks you're working with, right? When they've been asked the tough questions, then you know how people react during tough times.
right, right. That is amazing. Let's see. And then I guess here's a softball. Like, do you think our community should be investing in alternatives, and why? This you can bring us on home
Yeah.
with your answer
Uh,
here.
do I think our community should be investing in alternatives? My answer is yes. But I would add this caveat to it, right?
Mhm.
Even with there's alternatives, and we talked about there's different classes in there. There's a lot of other things that we also should be investing in, like education, right? So that we can make sound decisions on the alternatives.
Mhm.
So I think it's kind of a full circle question because you don't want to eliminate alternatives from our community. I think that's great, but I also think that there's other places that we also simultaneously need to be investing in so that we can get the most out of this alternative investment class that
Yes.
exists. So if we're doing all of those hand in hand, I think we're making great progress. Like I said at the beginning, right, that capital continuum, we need to be learning across the spectrum versus saying, hey, we're all here or we're all here. It's like
Right.
increase the spectrum of knowledge.
Right. We need to be everywhere. We belong in all the spaces.
That's exactly right.
Ah,
That's exactly.
Chijioke, I always enjoy our conversations. I thank you so much for giving us your time today, and obviously, I'm always reaching out. So I'll talk to you soon.
No, thanks again for having me. This has been great.
Okay, fantastic.